Good afternoon. Thank you very much indeed, ladies and gentlemen, and welcome to our panel, Riding the Cycle, How Do European Investors See the Markets? Well, to help us, we do have two out-and-out operators and two out-and-out investors. But as befits a panel that did have, before this morning, two PhDs, numerous degrees, and authors of several books, they've got views on all sorts of other things which we're going to be talking about. We're most indebted to Andreas from Union Investment, who has stepped in at the very last moment, as Frank Billand is trapped on a train on the way here. Andreas is Head of Acquisitions and Sales for hotels at Union Investment. We have next to him, we have Puneet, who, as Jonathan mentioned, is the Chief Executive of Steigenberger. There's 105 hotels currently at Steigenberger, and several under development as well. And Puneet is well known for having a master's degree in international hospitality management. Next to him is Federico. He's the CEO of NH Hotels Group. Before joining NH in 2012, he did various things, but one of the things was he was the Deputy General Manager of Disneyland Paris. And probably most of us in this room wrote a letter to him complaining about the cost of a family room at the Disney Hotel at some point in time. I don't know exactly how many degrees he has, but he's written several books on the cultural differences between countries. And then finally, with more degrees than you can shake a stick at, is Dr. Wojciechowski. Edward is CEO of Tonstate, a family investment company specializing in the real estate markets. He's got significant exposure to UK hotels and also in continental Europe. And his PhD, by the way, just if you're interested, is economics and business administration. But really, just to get us going, as ever, the question I always ask at the beginning, and I think we'll start with you, Federico, is how's business?
Business is good. Business is good. I think we finished 2014 as a group with, the most important thing is delivering the targets both in EBITDA and revenue targets we had, growing in line with what we had communicated to the market. And I think especially good during the second half of the year, where we saw RevPAR growing in an important way, nearly 6 to 7% in Italy. That's a core market for us, around 5 to 6 in Benelux, Spain around 6%, and all Northern Europe around 4 to 5%, and Latin America also doing in the range of 5 to 7%. So I would say, it's increasingly better, I would say. And as a result of both things, because there is a part that is driven by the macroeconomics, again, what's the business situation in each country. And then the most important thing also, what are the part of the growth that is coming by the transformation we are making in the company, the refurbishments we are doing with more than 200 million investments in refurnishing hotels, and actually in moving up towards upscale, mid-scale, upscale, and upper upscale with NH Collection that is giving very good results and better results even that we expected.
And ignoring the stuff you've got outside of Europe, is there a north-south divide in terms of your performance?
Well, I think what we are seeing is more than countries, is nearly destinations. I think we are seeing outstanding performance in Milan, very good performance in Madrid that was suffering a lot in the past, decent performance in Barcelona, good in Rome, also good in Berlin, in Düsseldorf. So it's more, I think, more and more driven, I would say, by towns and locations than overall country situation, I think.
And Puneet, how's business with you?
Well, I think it's the same, it's quite good, but I don't see the 5% and 6% in secondary and tertiary markets as yet, especially where our current portfolio and operation is. But we are seeing a positive northward trend. And to add on to what Elizabeth said, what worked out very well for us at the beginning of the year, for 1 month, I don't know how it will shape up for the rest of the year, is the Swiss franc, because we are the host hotel of World Economic Forum. So all the business was booked in Swiss francs. So once in a while you get lucky and you get 20% more bottom line without doing anything. So
to be fair, the Swiss franc has gone like this for 20 years.
Exactly. So I think it's good, the outlook is positive. And I also have to agree with her on our presentation. We have a hotel in Brussels, and on one hand it's great news that nothing major is happening in Ukraine, but it also means no crisis meeting happening in Brussels, so it's a bit of a challenge.
Andreas, you must be thrilled. These owners
Yeah.
doing so well. I mean, a German investment bank, investment fund must be a happy place to be.
You're absolutely right. We've been quite active the last two years, acquiring 12 hotels in Germany and Europe. We've been establishing the first hotel fund dedicated for economy and budget hotels only, and that has been a great and successful start with the investing in 4 Motor One hotels within Germany. What is coming in the future? It's a big question mark. We do have a lot of liquidity in the fund, so there is definitely the need and the requirement that we are looking for very good hotel real estate asset. Of course, on the same time, we've got the challenges with pricing, so we need to see how we can adapt our strategy in the acquisition structure to get the right real estate into the funds. We've got 8 out of 9 funds, except the retail fund, the 8 out of 9 funds are interested in hotel real estate assets, so there's a lot to do in the near future, and yeah, we're looking forward to it.
And Edward, you are the most active operating investor I know in hotels. Is this all nonsense? Are you sort of beating up your operators? Are you beating up your owners?
You should tell me. Look, going back to the question which you asked initially, is if business is good. So I don't think you've ever seen a person who sits on those stages who said to you business is bad, because otherwise they would have not been here. So business is not good, it's not bad, but I think it's fair to say it's challenging and unpredictable. In terms of turning to your second question, if in terms of activity and beating the operators or beating your managers, I don't think it's very much about beating, it's about exactly what I told you before. The business is very unpredictable now. It is good, so you get a good top line, you get a reasonable good bottom line, but I think it is challenging to make sure to see that it's continuing like this and continuing this constantly with a constant intrinsic growth in it.
And are you finding opportunities to buy? I mean, if everything is picking up, I mean, doesn't it make it difficult to buy?
It's difficult. I tell you what is difficult, and I've seen it covered also in this conference as well, is the concept of really to valuing how much the opportunity which you want to buy worth, which is obviously two different things, a value and a worth. And here it comes if you're buying or you're selling. And I met last week someone which asked me not to quote him by name, but I will quote him, but not by name. But he told me it's an excellent time.
Don't, come on, give us a hint.
It's an excellent time. It's a very good time to buy, and it's a very good time to sell. And I think it's a very profound statement, and this have never happened in the hospitality industry, that you have a good time to buy and a good time to sell. But I think if you define it and distill it down to what it's good, it's very asset specifics. So I think to go on to say it's this city or that city will be wrong, but specific assets do very, very well.
What, at market levels or a type of operation, or?
At both. At both.
And are you finding this, Andreas, as well? Are you finding it difficult? I mean, 9 funds, 10 billion euros to invest in hotels. I mean, money's running out of your pockets.
Yeah, well, you mean funding from the equity side? So it's we have a lot of demand here with our funds, both through private investors, but also through institutional monies flowing into the funds. We do have to stop the distribution for funds for a long time, as otherwise there will be too much liquidity getting into the funds, and we still want to stick to our rule. Never lower the quality of investment. So this is important for us. We are long-term investors. We are long-term holders. This is of importance to us. This very hotel you're sitting in here is in one of our funds, and it really shows you that long-term sustainable income is something our investors are looking at and they're expecting.
But I mean, Roy March was saying earlier on that pension funds need 6.5–7% return over a 10-year period to get out clean. They're not getting that on gilts, they're not getting that on equities, they're not getting that on cash. I mean, can you buy stuff at 6.5–7%?
Good question. That's a challenging task. Maybe we are going slightly below that mark, so that'll be the first answer. For us, it's really important that we receive the income on a steady basis for 20–25 years, as for the term of the lease agreement. This is key for us. We, as you all know, we are looking for fixed lease agreements. We can also do variable lease components, so therefore we do appreciate the steady income stream, which should be then, of course, being backed by the return of the hotel. So we're also looking at the returns of the hotels and see if they are covering the lease payments on the long term. We're doing sensitivities here. So this is the most important thing. If you're talking about returns 6.5%, 7%, that may be, or 7.5% or even higher, that may be more on a management agreement basis. We are lease agreement basis. We are looking for secured income. That is the game we're playing.
And Federica, I mean, you own a quarter of your hotels, you lease, I'm just trying to think, half of your hotels, you manage the other quarter of your hotels. Mm-hmm. Are you buying? Are you selling? Are you renegotiating? Are you reconfiguring?
Well, I think it depends on we're doing the three things you mentioned. So I think it depends more on the opportunity, on the country, and on the business situation. It's like we have around 55% of our rooms in lease. We have been renegotiating with a lot of focus in Spain, for example, to make sure that part of those leases would become variable. Okay, because I think it's a very good formula where still you can guarantee a minimum, okay, better than in the management. I mean, you can guarantee a minimum return, but actually you share the upside, the potential upside with the owner and yourself.
And they share the downside?
Yeah.
So, I mean, this is always the way, isn't it? Oh, right. Let's go to a variable lease. That way you get to share the upside.
It depends on which are the moment in which you are negotiating. Today we are selling the upside. But I think obviously, yes, you are, if you are looking to 12, 18 or 20 years relation, possibly in that relationship you would have some years where it helps you, some years where it helps your partner. And I think in terms of buying property or management, obviously we like management, but we announced 4 weeks ago the acquisition of a company in Colombia and Chile that will make us the number one operator in Colombia. And you know, that was a purchase of a company that was not in the plan. Actually, the benefit is 83% of the rooms are in management, but we have invested also in some of the buildings and properties that they have. I think it's at the end, what is the opportunity, how much cash you need to invest on that, how much of that is assets, and if the opportunity is worth, then we are really open to look to the right mix, absolutely.
Puneet, I mean, you're mostly leased, I think, aren't you, in your portfolio? I mean, I think you've expressed to me in the past views that are pretty clear on leasing. Do you like leasing? Do you like a fixed lease? Do you like a variable lease? Do you like a hybrid lease? Do you like what do you really want from investors?
I think leases are a kind of a part and parcel of the Western European economies, because the funding, where the money is flowing out of the pocket, is here in the left, you know. And he can only do leases, as he said. So there is no point trying to go and ask him to do a management contract. I also think leasing is an opportunity, especially in our investment has to be anti-cyclical. And now with the interest rates where they are, and Andreas did not mention, 5, but he mentioned 6 or 7% return. He tries to get the 5 and the 6 or the 6.5 through the variable part. I think it's a good opportunity. God knows when this kind of timing will come back, that you're able to log into assets if they're not overpriced at a lower level. Having said that, and being very open and thinking that leases is good, we ended up last year doing 75% of our agreements in management contracts. So yes, we would like to do leases, especially with our mid-market brand, because of the cost structure. The likelihood of having a loss, even with the RevPAR decline, is very, very low. So I think it's a good model, it works well, and you can have a faster rollout if you understand leases. Now, if you go to the UK, for example, your country, and you have a UK FRI lease, that's also not bad, but be very careful. Not a 35-year UK FRI with roof and structure and everything, your responsibility, and there are no caps allowed, then it can be a very, very difficult thing to do. So I think as Frederica said, it depends. I think a lease in Scandinavia, for example, is only 10 or 11 pages. It's never more than 11 pages. Maybe one is there of 12 or 13. It's easy, it's simple, it gets done. A lease in Germany with a very clear responsibility of the owner on the roof and structure, and the operator on the normal maintenance is good, unless somebody went and overspent the money on other things. So I'm actually for leases, especially in this market.
And Edward, I mean, when you own your hotel and an operator comes along, or you approach an operator, I mean, what is your preferred way of interacting with them? Is it through a fixed lease? Is it through a variable lease? Is it through a management contract for someone else? Is it through a franchise? What is the best way, or is it hotel by hotel?
Personally, with leases, I have bad experience. Because, like you say, it's very good, but when it's very good, it's very good. But when it's bad, the operator tends to come to you and, using your words, renegotiate the lease.
Yeah.
So you then start to be busy, and obviously you don't have any visibility over the assets, which makes it over the trading, on the trading operating. There is a very difficult, in the terms of power, of a balance of power on the negotiation table, you as an operator will have much more than me, because you know how the operator, it will be difficult for a normal owner, not that I'm not normal owner, but to come and take over the assets. And we have done this before, but it's difficult. I think the best solution which works nowadays, it's something which we do quite a lot. It's called a manchise, which is a man lease, which is semi-lease, semi-management contract. So it's a management contract, but works a little bit like a lease. So it's give a lot of freedom to the operator to run the assets. It's give a certain power also to the owner, and the combination of the two creates a security of income where the owners know what he gets. But if things go wrong, you have a mechanism which do not require the two parties to renegotiate, but rather to adjust the terms on the pre-agreed terms.
From your point of view, I understand from an owner's perspective, but I personally consider that to be the worst form of model. Because for so little fees, I give such a big guarantee.
Not an owner.
It is, exactly, so, no, but it was a nice try.
This is why we don't do business.
Andreas, you hinted that you're going to have to be more flexible. Are you going to be getting into bed with a man lease?
I don't think so. So we've been having a great success with the leases for 40 years with Uninvestment. The leases have always been served. So I think it's always a question of, you know, where you log in the lease. You of course have to very thoroughly look at the P&Ls and see that you don't get into an over-in situation from the very beginning. You also need a good covenant behind so that you can have really good structure also for downturns in place. But indeed, of course, as an addition to the fixed lease, which will be guaranteed for the entire term, profit share agreements would be our preferred model to play with. So after the payment of the fixed lease, there'll be like a split of 80-20 or 25-75. Of course, the bigger part for the operator. I couldn't find somebody yet to do it the other way around, but that'll be the play we would be in.
Now, you've just set up a budget hotel fund.
Excuse me?
You've just set up a budget hotel fund. Federica, you're not in budget hotels, are you?
Say it again, sorry.
You're not in budget hotels.
No.
And I don't think Steigenberger's in budget hotels, really.
No.
Why not? There's a fund there. You could get fantastic assets. You could run. I don't think, Edward, you're in. Are you in budget hotels?
Very little.
Very little. Why not?
You just sold for me one.
Well, I
Yeah. I prefer to answer the question with another question, if you don't mind. Is how big is the opportunity in the segments where we operate? And that answer. So I think when you look to NH, the portfolio we have, the locations we have, and the experience that we have formulated for NH hotels or for the Now or for the NH collection, I think there is still a huge opportunity in the mid-scale, in the upper scale, and in the upper scale. So I think the world on that is something I know how to do. I think we can have a competitive edge versus many competitors around. There is something that is critical in NH, that these people like to serve and serve a lot. So we like and we enjoy to give you a service above average. I think there is enough amount of consumers in the world where we operate that are ready to pay for it. So based on that, it's actually we took the decision 2 years ago to exit around 45 to 50 hotels that were more in the economy. But just because we think the opportunity in the other side of the market is big enough to make of us a big hotel company. If I would be another company defined maybe to be economy, then I would have considered that opportunity. But I think the opportunity and the profitability, and that's something we do well, I think it's better to focus on that one.
And Puneet, similar story?
Yeah, I think it depends on your business model and what suits your DNA the best. But we have made some changes with our intercity brand. So it is, with the new prototype, it's just positioned above the budget and in a very good, I would say, mid-market with F&B. And I don't think we need to occupy that space immediately.
Yeah.
No.
Now, those of you who've been to these sessions before know I have several things that I always crack on about. Loyalty schemes, which I detest, green initiatives, which I think are just cost-cutting at the expense of the customer, and branding. Now, I'm not going to talk about the first two, but I think the third one, branding, I think there's plenty to have a little bit of a go at here. Edward, as an owner, does branding matter to you, or are you saying, well, actually the branding is vitally important, or is it becoming less important as we move into a sort of technological age?
It depends on the hotel. It very much depends on the hotel. At overarching comment, I think branding is very important. Yeah. It is very important because it has a lot of value provided the brand is managed well and introduced to the right assets. It's very, very important. If you're looking over, we have two very large hotels in particular. I cannot see myself owning these hotels without a brand. A brand is a good instrument to fill up a room, especially to what is a generic product. If you're talking into the spectrum of the more boutique style, more individual hotels, it is not so necessary today when you have such a developed markets of OTAs, and the whole thing just works for itself, provided you know how to operate the system and deliver a good product. So I think there is a very big dichotomy between the two sides of the market, but branding overall is important.
And Andreas, for you, is it all covenant? You don't mind, as long as the person's got deep pockets, you don't mind whether they brand it, unbrand it, doesn't matter?
Well, the brand is of course important, you know. Of course, we look at the numbers and see how the coverage is on the lease. That's the key point. But then, of course, at the end of the day, for a long-term sustainable income, the brand is definitely of importance. It is, of course, depends on where you are in the market. Maybe New York City, if you go there, maybe there are some hotels you're doing just as good without the brand. But other markets, you definitely need the brand. In this very hotel, the Intercontinental brand, so we are very happy to have the flag on top of the house. This has not always been the case, but having the flag on top of the roof is definitely part of the value of the real estate with a long-term contract in place.
So when you're selling, people will pay you more for something with an Interconti.
It does have a certain security with it, of course. The income is higher, the returns are higher, the booking system behind is stronger, definitely, yeah.
So not, say, Steigenberger, for instance, would that be a bad brand to have on the top?
Well, we may talk about, there are other opportunities which we may talk soon. Yeah. So we're happy here with Interconti, and with Puneet, I'll happy to go for other cities then.
But I mean, Puneet, seriously, I mean, Steigenberger is a very well-known brand. Is it when you arrived a couple of years ago, was it being pushed hard enough? Was it, I mean, doesn't everyone know Steigenberger?
Yeah, I think if you ask the unprompted or prompted brand awareness of brands, especially in the German speaking, you say, name me a hotel brand, the likelihood that it says Steigenberger is very high, and it's measured by different institutes. But I don't want to say too much about it, but I think there is limited scope of growing these kind of brands in a certain market. I think the more the mandate was to make this more an international brand. I think we have a strong presence with 52 hotels in operation, or 50 plus hotels in the German speaking. I think that's pretty good. I think now it's time to take it, export it, and take it out. Having said that, just now Andreas said the brand is very important, but now I'm a bit confused. What is more important, lease or the brand?
Why or?
Okay.
Why or, yeah. Just the right lease, the right coverage on the lease, and then, of course, a great brand that's
Well,
there.
if I recall from the negotiations you had about this hotel, part of the stick you had was saying to Intercontinental, we will remove you from Berlin. And then you had the stick of we will remove you from Berlin, and you had the carrot of here is another lease as long as you want to sign it.
Well, I think that was a very special situation. We may sit down, we may sit down separately afterwards if you like, and we can have a chat about that. So I don't want to go too much into detail here, but that was a situation.
Yeah.
But I think it's a real win-win situation. Intercontinental is happy with the hotel. We are happy with the Intercontinental in Berlin.
I am, of course, joking.
Yeah.
So Steigenberger, a German-speaking brand.
Well, Steigenberger is known for 85 years for hospitality made in Germany. So yes, it is a company with German roots, and we're very proud of it.
And so you'll stick with the brand? You're not going to change the name?
Definitely not. Definitely not.
Someone in your team.
No, there's not so many people.
Herr and Frau Steigenberger. NH Hotels?
Well, NH Hotels, I think first the brand is extremely important, and it is increasingly, I would say, important to make sure the consumer pays for what is different. Now, I think what you see is, and you were talking about being a bit more polemic. I think brands need to have. It's not only the sexy, presentation of what is the brand equity and the attributes, but you need to be very serious in how you take those brands into extremely concrete articulation of the operational promise. And I have to say that more and more we are seeing, the moment we decide to launch NH Collection, or when we are discussing with owners, there is more discussion about, okay, what is NH Collection, what is now bringing to the party, how is it different? And I think even internally, we are also having more and more discussions saying, well, that project that is coming, should it be an NH? Should it be an NH 4 stars or 3 stars? So I think that helps. That's coming. That's happening more and more often. But I think that helps also to make the business case more realistic, because not all the hotels, not all the places will give you the same, return. So depending on which brand and which operational promise you have different results. So I think it's increasing, and it will become more and more important.
And Edward, you have a variety of brands in your portfolio, and obviously sometimes it works, sometimes it doesn't, sometimes you get on with it, sometimes the brand gets on with it. Do you regularly review the brands that you've got over your assets and say, should we be changing it? Or do you think this is always going to be an Interconti, this is always going to be a Hilton, this is always going to be a...
Well, it's very, very difficult. It depends which company. If you're talking about the very large companies, you cannot just change a brand every Monday and Thursday, and and it also depends the property. A lot of your guests and a lot of your customers and the market itself will sometimes associate your hotel with a specific brand. So I think there is a damage if you don't manage this process very correctly. However, if you're talking about completely different spectrum of the market, which is more smaller hotels in either smaller towns or more unique assets, I think the brand is not so relevant. It's very much the distribution which the brands bring over to you. Going back to the large brands, you do have to the brand itself. I think the two factors you need to take under consideration is the sustainability of this brand and what they have at least a program for the brand for the next 5 years. And I think especially, which all of those, I think two of you in particular speaking about pipeline. And I think it is very important as an owner to see that the brand which he associates himself with at a specific market in a specific town does not over-dilute itself within a specific city. And whereas you have the willingness or you have the desire to expand the company as much as possible, the last thing what I would like to see is you open 17 hotels within my town. Or within the town which my asset is in. Your argument would be in return that it's very good because if you will not open, someone else will open the hotel, and it's a very familiar dialogue. So I think it needs to be balanced correctly.
And do you ever take hotels under your own management?
Myself, yes, but it's in a very small scale.
Right.
Yeah, it's very small scale. There is a value in a professional management company.
Right.
What we pride ourselves as being professional hotel owners. We do not. There are some hotels which we run privately by ourselves, but it's a very a small section, and normally in a very small private hotels where the general manager has got an interest within the asset. So it's very much his hotel. But there is, and I always say to all our managers that there is a great value in a professional management company.
And I mean, I hear all around this the conference last year, this year, half the companies saying we've completely ignored the OTAs. We're trying to do as much as we can to prevent them eating our lunch. And other people said, well, we've embraced them totally. I mean, Puneet, how much of your business comes out of OTAs? How much do you generate yourself from your web? How much do you generate local? As Edward says, you know, you've got a local market sewn up in some cases.
Well, actually, if used wisely, OTAs for companies of our size actually add value.
Right.
And as the name of the game is, in primary markets, their contribution could be as high as north of 20%. Wow. And in secondary, tertiary markets is anywhere between 5 and 10%. I think, albeit it's a challenge to get the cost of distribution under control, it's at the same time an opportunity for the industry to use it wisely. The only question mark here is the MICE business has more or less died after the financial crisis. And if that's going to be a trend forever, then the OTA's contribution is a challenge, because the percentage of the bookings coming through them goes or keeps going up. But if that business starts to come back, maybe not in the same form as pre-crisis, I feel that for a group like ours, which is trying to become international, we cannot afford to have offices in China and in Asia and other parts and Middle East, maybe 1 or 2 people, but we need the GSAs and the OTAs to have that reach as the bigger brands have.
Right. And Federico, the same for you?
Yeah, I think it's more or less the same. I think sometimes we are too obsessed with the OTAs. We think what is relevant is how much of your business comes direct to you or indirect to you. I mean, there are OTAs and there are many, I mean, there is still tour operators, there are many indirect customers that come. So I think we have more than 50% of the business is still direct to us. And as you said, the important thing is what is the average cost of that indirect business. That is what at the end hits the P&L of the company. And you know, sometimes they add value, sometimes it's a fee we need to pay to be part of the game. But this is the same that happened in consumer goods with hypermarkets or with supermarkets, you know. Now I think what what is always the key is how much more innovative we are or we can be, so consumers come directly to you because you are selling something special. If you compare the media spend of any OTA in any of the European or worldwide markets versus all the hotel industry together, we are dwarfs. I mean, the amount of money that they would spend is much higher. So at the end is which are the services or which are the benefits that you can go direct and how relevant they are so the consumers come to you. I think the MICE, as you said, is very important that we come and we keep doing a lot of the MICE business direct from the hotels or direct to us. And in order to do that, you need to bring innovation that is not a standard innovation in the market.
And what are you doing when the customer comes to your hotel? I mean, I book via booking.com and I come to your hotel. Suddenly you've got me there personally. You didn't know me before because I was just trawling the web, looking whatever else it might be. What are you doing once I get there to make sure that next time I book directly with you?
I would wish to do that, but I cannot do it all the time. No, I think at the end we try, you know, there's a sentence that I think with the customer you need to be channel agnostic, okay? I mean, at the end, it's not his fault or her fault if they book direct or indirect or via an OTA or a tour operator. So I think we need to treat them absolutely the same way, because if not, they will not come back or yes. I think at the end, we are in a fight to get more top of mind. So hopefully, if I'm able to impress that consumer with a great experience, they may say, okay, well, next time I'm thinking of NH to go to Berlin, then eventually I may call them or I may go to their web. I have to say that even when you look to the OTAs, I think it's nearly 80% of the consumers who book into an OTA, they may open the web page of the hotel company they are choosing. So the point is, what are you offering at that moment, how appealing or how relevant it is, so I may decide going with you. So I think it still is, the possibility is there, and I think it's about relevancy, top of mind, and bringing innovation and different things that the consumer recognize.
And the same for you, Puneet? What are you doing when people come to your hotels through an OTA?
I think absolutely there is some kind of sense of responsible business or ethical. It's not ethical if you go and do these kind of things. I think the more important thing.
Sorry, which bit's not ethical?
Try to get the customer straight through to you, although it's coming through that point, and you have to do certain actions. You have to either send a bottle of wine or a fruit basket, make some appointment, tell them, why do you do this? Why don't you come directly to us? I don't think if it was happening, why the person would not come in the first place directly. I think, but the more important part for the industry is to think. I think we complain about OTAs and commissions and cost of distribution because as an industry, we have stopped making money on many sources which were previously making money. I mean, telephone revenue income is gone. Free Wi-Fi is the norm. Restaurants and food business, we find it difficult to make money. Nobody makes money, or the majority doesn't make money on laundry and on spa and all these kind of services that you provide.
I'm surprised in the hotel business.
Correct. But in the recent times when the OTA started diluting the rooms department profit, that's how we started complaining. So I think we have to come up with what Edward just now said. We are still in the hotel business and we have to figure out ways to make monies and other sources of revenue and focus our attention on that than the entire industry focusing on OTAs.
And Andreas, whilst Puneet is working out how to make more money, you'll give him a holiday on the rent. You'll say, we understand you're making less money.
Yeah, well, OTAs for us is, of course, we are indirectly affected through that. We look at bottom line, but we basically have aligned interest with the operators. We do see that they may eat a part of the cake away, but on the other hand, they also help and they contribute. I think the rate parity is still an issue which we are struggling with, and if we're getting this topic managed and tackled, then I think that'll be a good future also for OTAs with the hotel operators.
Okay. Jonathan Worsley has just whispered in my ear, please go on for another half an hour, but I've said no. So please thank Andreas, Puneet, Federico and Edward.
Thank you.